Hello and welcome back to Market Vibes by Sri Lanka. I'm Oshada Divasgunasekara and I will take you through some of the key developments in Sri Lanka's macroeconomy during February 2025. Before we look at the latest economic data releases, I will give a brief summary on two key developments that took place during February 2025. The government of Sri Lanka presented their maiden budget on 17th of February 2025. Accordingly, in the budget, the government estimates revenue and grants will make up about 15.1% of GDP in the year of 2025, and the total expenses will be around 21.8% of GDP, leading to a budget deficit of 6.7% of GDP. The primary balance for the year 2025 is expected to be around 2.3% of a primary surplus, and all of these numbers are in line with the benchmark set within the IMF program. Following the presentation of the budget, the IMF board approved the third review of the extended fund facility with Sri Lanka. Now moving on to the economic data releases. Starting off with inflation, the deflationary conditions persisted within the month of February 2025 as well, with inflation measured by the Colombo Consumer Price Index being recorded at negative 4.2% on a year-on-year basis. Deflation is likely to continue to persist over the first half of 2025 as well, before it gradually starts to move towards the 5% target range of the central bank in the second half of 2025. The main reason for the deflationary conditions is the reduction in electricity tariffs over the last few quarters, which led to 6 months of deflationary conditions. However, the IMF in their third review highlighted that the downward revisions made in January 2025 have resulted in operating losses at the Ceylon Electricity Board, and the authorities are likely to consider an increase in the electricity tariffs at the next revision, which is scheduled for in April 2025. Moving on to the interest rates, market interest rates declined slightly over the course of the month in February 2025, with the average weighted prime lending rate declining by around 20 bips to reach 8.36% by the end of February 2025. The 12-month T-bill also declined by 12 bips to reach 8.35% by the end of February 2025. These rates have continued to decline at a slower rate so far in March 2025 as well. The next monetary policy announcement is scheduled for the 26th of March 2025. Looking at the growth in private sector credit, this has continued to improve on an year-on-year basis, with credit to the private sector growing 11% year-on-year in January 2025 to reach 8.15 trillion rupees. However, a slight degrowth was observed in January 2025 on a month-on-month basis due to the seasonally higher credit growth that is generally seen in December amid the festival season. Looking at the exchange rate, the LKR appreciated by around 0.7% in February 2025. This was following a depreciation of around 2% in January 2025. The indicative rate published by the CBSL closed at 295.5 rupees to the USD on the 28th of February 2025. The LKR has remained relatively stable so far in March as well. The initial demand for vehicle imports with the market opening on the 1st of February 2025 seems to not be excessive, resulting in a relatively manageable level of demand for the dollar. Looking at the gross official reserve position, this increased slightly on a month-on-month basis in February to end at just under $6.1 billion by the end of the month. The target reserve level for 2025 under the IMF agreement is set at $7.1 billion for the end of the year. Looking at the external trade data, export earnings improved by 9% on a year-on-year basis to $1,053 million in January 2025, mainly driven by exports in the textile and garments category, which expanded by 21% to $461 million. Agricultural exports also saw a 13% expansion on a year-on-year basis. Imports also increased 18% on a year-on-year basis to $1,786 million in January 2025, with consumer goods imports increasing 35% on a year-on-year basis. Intermediate goods imports grew 8%, whilst investment goods imports also increased by 36% on a year-on-year basis. The trade account recorded a deficit of $733 million in January 2025, which was a 35% expansion on a year-on-year basis. Earnings in the net services improved by 5% to $418 million in the month of January 2025, with tourism being the primary contributor there. Looking at tourist arrivals, this improved in February 2025 by 10% to reach 240,217 persons during the month. The arrival numbers for the first 9 days of March 2025 were recorded at 70,449 persons as well. Looking at worker remittances for the month of February, worker remittances were recorded at $548 million, which is a 15% growth on a year-on-year basis, but this was down 4% compared to the previous month of January 2025. Looking at the Colombo Stock Exchange performance during February 2025, both the key indices, the All Share Price Index and the S&P SL20 Index, saw a 4% decline during February 2025. So far, the indices have continued to correct during the month of March as well. And with that, we will conclude this month's Market Vibe session. Thank you very much.